for tonight on gold trading, market outlook for 2021. Now, we'll be starting the session proper at 7:02, 7:03. So do give some time for our friends. Seems like quite a big turnout tonight. So meanwhile, just grab a notebook, a pen, and probably some coffee if you need, and then get ready for the training later. So on the screen right now, you see some QR codes here. You can take this time to register for the free demo accounts available here. Tonight, the topic in discussion will be available on MT5 platform. So I do encourage you to download this MT5 free demo account for you to just familiarize yourself with the functions and how to use it. So I talk to you again at about 7:03. Thank you. Right. Good evening. Thank you for finding time to attend tonight's webinar on gold trading, market outlook for 2021. This is Shermaine Tan speaking, your presenter for tonight. So I would assume that most of the audience tonight here would have some form of investment or would be looking at adding gold to your investment portfolio. So I will try my best to cover as much as I can to assist you in understanding this ever-changing market conditions. However, webinars like this can only assist you that far. So I will still strongly suggest that you engage a broker to help you keep track on your investment portfolio. All right. So during the webinar, if you have any questions, do type them in the question box and I will address them from time to time. All right, and so before we begin, let's just do a sound check. If you can hear me, just please type yes into the question box. All right, thank you for responding. So let's just start tonight's webinar. Right, so for the benefit of those who are listening to me for the first time, just allow me to do a brief introduction of myself. So I'm a licensed representative with MAS and have been in the industry for more than 10 years. So during these 10 years, I've seen and experienced many types of market movement and how trading has dramatically shifted until now. So when new investors or traders, when they come to me, I will assess their investment portfolio, as well as study their risk appetite and recommend the right trading strategies that match their lifestyle. So investors would discuss about their strategies with me, and then I can just spot loopholes and potential pitfalls if I see that they heavily invested in one basket. So of course, I have twice a month live Zoom coaching sessions with my investors, where most of us, we will meet and discuss about the current market situation and which market to be focusing currently, which market is trending, which market is having lots of opportunity for us to tap on. So during this session, the Q&A sessions are for investors that are under my care. So where they might feel stuck or not sure how to look at the markets few months down the road. So far these sessions have been quite beneficial in aiding investors in their trading decisions. Okay, so on to tonight's topic proper. We are talking about gold. So gold is used as a standard of value for currencies all over the world, right? So the price of gold is often measured in US dollars, and we know that the value of US dollar fluctuates according to market conditions, and that is due to either political or geopolitical conditions. So what influence the price of gold in the current marketplace? Let's just take a look at some of the significant influences on gold price fluctuation that you as investors with an interest in gold trading should understand. Okay, the first one, we are looking at global crisis. Now, because gold price, they tend to rise when people lack confidence in governments or financial markets. So gold is also often called as crisis commodity. Now, world events often have impact on price of gold because gold is viewed as a source of safety amid economic or geopolitical turmoil. So let me give you an example. The price of gold actually spiked up after 9/11 event, and also, of course, various government and political turmoil. So the bottom line is, when there is political chaos, it equates to more interest in gold as a safe haven. All right. Next is inflation. A common reason cited for holding gold as a hedge is against inflation and currency devaluation. Now, we all know that currency value fluctuates, but gold value in terms of what an ounce of gold can buy will stay more stable in the long term. Now, because gold holds value outside of politics, it is valued the world over gold as attractive as a low risk, solid investment in the midst of all these fluctuating currencies. Now, investors may feel encouraged to buy gold when they believe the value of their paper money will decline. All right. And next is the value of USD. As I mentioned just now, gold is often valued in USD. So we know that the US dollar is still the world's dominant reserve currency, making it one of the main currencies that different countries hold for international trades. Now, the price of gold and the strength of the dollar have a pretty clear inverse relationship, meaning when gold is strong, when dollar is strong, for example, gold is weaker, and of course, vice versa. So let me just give you an example. So probably in 2014, US dollar index actually rose by almost 2 points, never that we've seen before. And of course, this will soften the market for those that are selling gold. So on the other hand, people that are buying gold may see a strong dollar as a buying opportunity that will provide some price support. Okay, next is central bank instability. So same thing, government instability, central bank instability. Now in US, the Federal Reserve is the central bank. So we talk about most countries, they have central banks like European central banks, Bank of Japan, Bank of England. And of course, in Singapore is MAS. Now, bank failures and irregular economic policies make buying gold seem like a good safe haven investment. Now, once again, people flock to gold when the current paper money system experiences uncertainty. Some investors, they prefer physical and tangible security of holding gold when central banks are going through deficits, right, as a protection of wealth. So this will increase the demand that will drive up the value of gold even more. The next thing is interest rates. All right, this will affect the price of gold. Why? Because gold does not pay interest like treasury bonds or saving accounts. So the current gold prices often reflect increase or declines in the interest rates. So I will touch a lot on this tonight. So let me just give you an example of when interest rates increase, gold prices may soften as people sell gold to free up the funds for other investment opportunities, right? So vice versa, when interest rates decrease, gold price may increase again because it is lower opportunity cost to hold gold when compared to other investments. All right, so in nutshell is that lower interest rates equate to greater attraction to gold. Of course, the last one is quantitative easing. We all know it's just printing money in simpler terms. So QE often refers to central bank strategy of buying securities in order to increase the money supply. Now, when they flood the financial institutes with money, central banks like Federal Reserve, they hope to encourage banks to loan more money and increase the supply of money. So a larger money supply push interest rates down, and that could encourage investors to buy gold because of the lower opportunity costs. Of course, when overdone, right, this tactic can trigger inflation, which we can start to see it snowballing in US and also in Singapore also. So it's another sign of a rising price of gold. Now, bear in mind these 6 core factors that influence gold prices, and I'll be mentioning these factors as I explain how the current gold market move. Okay, now with this concept, let's apply them and see how these factors affected the gold performance in 2020. Let's do a fast recap. Now, in 2020, gold had a remarkable performance in the first half of 2020. So it increased by 16.8% in US dollar terms, significantly outperforming all other major asset classes. All right, so by the end of June last year, gold was trading close to US 1,770 per ounce, and it's a level not seen since 8 years ago, and gold prices were reaching record or near record highs in other major currencies. So some of the reason for gold shining performance is that number one, COVID-19 caused financial and geopolitical uncertainty combined with low interest rates helped to bolster up the gold investment demand. Next, net gold purchases by central banks remain robust, even though they purchase lesser than before. And then, of course, momentum and speculative positioning keep gold price volatility elevated, supported, and the expectation of weaker economic growth may result in softer consumer demand in near future. So therefore, structural economic reforms in India and China will support the demand in long term. Okay, now despite trending higher for the majority of July and August, volatility set for gold in September starts to come down. So it went down below US $1,900. Okay, and by the end of the month, gold had fallen below 1,900 for the first time in 8 weeks, and also because contributed by the appreciating US dollar, which they recorded the best performance since March. All right, so of course this will weaken gold further. Now, gold decline, they prompted deep buying. So there's a lot of buyers coming in, which helped to gold to stay afloat, as you can see during this period. However, it continues to slip down. All right, so moving forward, the previous support turned resistance at 50% Fibonacci retracement of the March and August rally near about 1765. They will act as a resistance. So which means that traders will need to see a break above that level, okay, to flip the buyers back into the favor of bulls. All right, so it has to break 1765 and up, then I will say you can continue to buy. All right, so of course, meanwhile, traders selling any short-term rallies of late, the next downside level to watch will be the 61.8% retracement, and that is about 1690. All right, so if it breaks this major support, you can turn short and start selling. All right, so I receive a lot of questions from my customers, and so I will address it for tonight's session. One of the question they ask is that how come gold is so weak? So let me just tackle it. The primary factors for gold recent drop, as we can see, it seems like there are only two. First is rising yields in US government bonds. All right, so the 10-year T-note, the Treasury note, traded off high about 1.5%. Okay, and of course, the second factor most likely contributed to gold's decline was higher prices in cryptocurrencies. Okay, now Bitcoin, they have been trading above 50,000 per coin. All right, and so the reason why, because many investors, they believe that Bitcoin is gaining market share for a global store value. We all know that gold is usually known as the store value of, if let's say paper currency, you have no confidence, you will buy gold. But instead, a lot of investors are believing that Bitcoin will replace gold. So therefore, you will see that the price keep increasing. But that said, despite its technological merits, right, we believe that Bitcoin will never be able to approach gold long history of being a reliable store of value. So this kind of movement in Bitcoin may be more of a short-lived phenomenon. Okay, so let's focus on the main factor that was weakening gold, which is the rising bond yields. Now, if you are unfamiliar with the concept of government bond yield, not an issue. I will break it down very clearly here, so you just follow me. Okay, follow with me. Now, so what are bonds and bond yields? We just put it very, very simply, is that when an investor buy bond, okay, essentially what they do is that they lend the bond issuer, okay, for this instance is the government, right, the US government. So they lend them money, okay. Now, in return, the government agree to pay investors interest on the bonds that they hold through the life of the bond and to repay the face value of the bond upon maturity. Okay, so bond yields have been on a path higher since early August last year. So no coincidence, right, that gold started to correct virtually around the same time. Now, gold pays no dividend, and investors have been attracted to the higher bond yields as stocks have gotten even more pricey to trade and to play. So intertwined with the rising US dollar, now as the rise in yields accelerated when we entered into 2021, foreigners likely to convert their currencies to dollars to buy US bonds. That prompted a rally in the dollar index, which could have a bit more higher to go before peaking. As you can see over here, which is last Friday, is about 92.15. Is not, yeah, this is quite high within this last 3 months. Okay, then this is a CBOE 10-year Treasury Index. Okay, and judging from the RSI, which is this one over here, and the MACD over here, okay, the momentum indicators, it seems like the index is looking at overbought region. Okay, so which means that we will see that there will be yeah, that's why it will continue to go up. So that's why you see that the gold prices are still remain quite weak. All right. And also another factor is that US deficits are streaming higher because there's an impending 1.9 trillion rescue package. We have just received news that Senate, they have approved 1.9 trillion package, right? And of course, Biden is not just aiming for 1.9. He's actually aiming for as high as 3 trillion. So they have approved 1.9 already. So you see that after a few months or probably the 6 months down the road, you see the snowball effect of such rescue packages. Okay, so the last year, major foreign holders of US debt, they just bought about 5.2% of all the treasuries issued, all the bonds issued. So who are the ones that are buying up the bonds, right? That will leave the Federal Reserve as the buyer of the last resort naturally. So let's just look what does that mean. Okay, total asset bought by Federal Reserve, as you can see, it actually spiked up. One big standout for me from this chart is how short-lived and relatively shallow any asset reduction were. Of course, the most obvious takeaway is the sheer amount of growth in assets. Over the 12 short years from 2008 to 2020, assets have blasted from 1 trillion to 7 trillion. Okay, so if we look at the gold, very big picture, this is a 20-year gold chart. You will see that the recent correction takes on a different context. All right, so you consider that gold big up leg from the late 2018 around here, all right, until 2020, from 1175 to 2070, that's about 76% gain in just 2 years. So of course, it kind of justify the current correction. Okay, so let's zoom into the 2018 to 2020. Looking at a 2-year chart, you will see that the gold correction may be nearly done. All right, so last April to June, okay, that's a trading in the current range around 1700 to 1750. And of course, the RSI and MACD indicators suggest that gold is at or very near oversold levels. So from price and sentiment perspective, even gold stocks, okay, they look like they are at their lowest also. So let's look at gold performance, gold stocks performance. Okay, this is Van EC Vectors Gold Miners. All right, and you can see that the movement for them is that they are sitting very close to the $30 level for gold stocks. So at this point in time, you would think that, okay, probably might reach quite bottom out already, and it's probably a good time to buy. So let's go back to our spot chart. Now, we know that bottom line is, after all this analysis, is that gold at 1700 is not a reason to freak out, even though it has been dropping down quite a bit for the past quarterly and monthly trend. Instead, over here, I think that after I laid out all this analysis for you, you should see this as an opportunity to go in. Okay, in all likeness, okay, 8 months of correction by about 18%, we are actually quite near at the bottom already. So as I mentioned earlier, gold weakness will continue short term. So if you are an intraday investors, you can short at every rally that you can see. Okay, so what do I mean by every rally? As you can see, this kind and this kind. Okay, so if you are intraday investors. Of course, if you are looking at longer term, then you probably will need to stick to the buy side. Okay, because gold will resume its shine, we believe, in the second half of 2021. Why? Is because of the after effect of the rescue packages, and also, of course, the slow economy recovery. We will see that it will start to impact on gold. So long-term investors, you can look for buy opportunity for every dip of gold value. Okay, now so far, do you have any questions? You can just forward them to me. All right, so I'll just wait for you to type in your questions. Okay, if you need me to repeat any of the concepts that I mentioned earlier, please feel free to go ahead and ask also. Okay, so I'll just take some questions now. How low will gold price touch before it rebounds? Let me see. Okay, let me just go back to the chart. Over here, how low will it go? Now we see that the last major low was 18 March 2020. That was 1487. So the possibility for it to go down to this level within the next probably 3 months is not quite possible, because we are looking at the snowball effect of the fiscal stimulus package that is going to snowball. As we all know that Senate have just passed the 1.9 trillion. So it's quite a big amount of money. And they have already been in place in doing it. So we will see that gold, even though the rising yields have pressured gold to dip, I will say that probably 1500, we can take a look at the opportunity again. So if you want to look at very, very long term, you just have to wait at 1500. So 1500, we will review it again with it depends on how the economic conditions are. Okay. Gold versus crypto. Okay, from Glenn. All right, gold versus cryptocurrency. Which one is a better hedge against inflation? This is, of course, as I mentioned earlier, gold will be a better hedge against inflation. If you are looking at cryptocurrencies, we know that Bitcoin is very, very expensive right now. Of course, yeah, you can buy fractions of it and things like that, but I think it's very overvalued. So, and also it's a very, very short-term type of phenomenon. We know that Bitcoin, it shoots up to 50,000, but it also can crash like 10,000 within a month. So the movement for Bitcoin is far more volatile than gold. And of course, we all know that no matter what, all these technological currencies, people are still veered towards physical, which and is more tangible. So gold will definitely be more, I would say, more stable as a hedge against inflation. Okay. All right. So you just continue to type in your questions and then I will address them as I move along. Okay, so I covered a lot of information so far, so I hope that it has been beneficial for you. Okay, so as we get busier with our lives, right, tracking your own investment portfolio can be too much for you to handle alone, especially markets moving, events are stirring. So as market experts, right, we are only able to give you the outlook and general recommendation. Now, if you need to engage a personal broker to look at your current portfolio, and because the reason why I always emphasize on this is that they will come in very handy to advise how much and the size of investment you can take on. So as I mentioned at the start, I do meet my investors twice a month on Zoom to give market updates and highlight key events. And most importantly, my investors will use the time to ask questions about the market and straighten out their strategies. So if you are not familiar with certain things that we talk about, the bond yields and what causes bond prices to rise, and what is the inverse relationship, and what is dollar index, and these are things that I will address them on my Zoom meeting. So webinars like that, because of the time limit, there's only so much I can share. So I really, really strongly suggest that you engage a broker, okay, that you can bounce off your questions with. Okay, now if you do have a list of questions you want to discuss in depth with me about your current portfolio, and you want to see whether adding gold trading to your portfolio is suitable for you, you just drop me an email and then I will just contact you from there. Okay, so moving along, you might think that so far you understand all these analysis. So what else you need to know before approaching us to trade gold? All right, so the next thing you need to understand is the contract specification. Now, in a nutshell, this is what you need to know. So probably you can take a photo, jot it down. Let me just go through. When you trade a gold contract, the contract size is USD $1 times the current gold price. For example, we keep it at 1700. Okay, but instead of paying USD 1700 to Phillip Futures, we only require 20% of the contract value as a deposit. So this means it's about USD $340. Okay, next is trading hours. According to Singapore time, 7 a.m. to 6 a.m. Of course, if there's any daylight saving, we will inform you. Okay, now dollar value of 1 point is your profit and loss. So this means that for 0.1 movement equates to USD 10 cents. So 1 point means USD $1 per contract. Profit and loss in your account. Okay, now spot gold is offered on MT5, which is, in my opinion, is one of the best trading platform currently. So it is, of course, zero commission. Okay, and margin required. What is margin? Now, spot gold is a leverage product, meaning that instead of putting USD 1,007 to trade one contract, 1 ounce of gold, we just require a 20% of the contract value, which just now I mentioned to you is about USD 340 to initiate 1 ounce of gold trading. Okay, so this deposit is known as margins, and they will be locked up by the system when you start trading, right? So from this example here, to trade 1 ounce of gold contract, you take 20% of the gold contract value, and that is USD 340. Okay, so like all other leverage products, once you close off your position, the deposit will be released back into your account. Okay, so this is all you need to understand. All right, so once you know how this works, let's talk about how you gather your research to help you in trading these markets. Okay, First, of course, we are talking about fundamental analysis. It's very important because this is something that I drill into my investors during my Zoom sessions. So let me explain how I train my investors to look at the market using these fundamentals laid out. All right, number one is you need to know the news. So for example, if we are looking at trading gold, you need to know what are the news that will push gold prices to whether go up or go down. Okay, what are the breaking news for the day? And of course, which basket is moving? Is it inversely related to gold, or will it affect gold or not? Okay, equity indices, commodities, currencies. All right, now if you follow my webinars every 2 months, I will always identify key drivers that are moving the markets. So you need to check on the news pertaining to all those key drivers. So for example, any more news on COVID-19 vaccines or any new geopolitical tensions, especially US, China. All right. So whenever government, they inject stimulus into the economy, gold markets will continue to go up. All right. So you might be wondering, for example, for the gold market, they should continue to move higher if there is US dollar weakness, right? Because 1.9 trillion rescue package being approved already. So they're going to print, right? So that is true. But you need to bear in mind the key drivers for the current market situation. All right. And of course, the reason why gold has been so weak is because of the positive vaccine development. All right, because Joe Biden, even though the 1.9 trillion package is approved, the vaccines, he also promised that he will vaccinate all adults by May. So that's quite a good positive vaccine news for US. So this news far outweighed the need for safe haven. So that's why you see gold remains pressured, is weak. Okay, and also of course, the jobless claims data just came out, non-farm payroll just came out, and is better than expected. Okay, so also of course the next thing we also need to look at the market, which market is reporting big movement, and then you focus on the news on why these movements are happening. Okay, so so this kind of fundamental analysis for new investors, right? I understand that it can be quite frustrating because so much things to look out for and so much things to gather, and sometimes there's a lot of noise. You do not know what news is important and what data is not important at all. So what I do is that I will gather all the breaking news and piece them together. And of course, I will couple with analysis of what's going on, what will possibly happen in the near future. And then of course, I will then just blast it out to my investors lah. Okay, so in this way, you will learn and understand that certain things are more important than any other news. And then so your strategies are more sharper in that sense at the end of the day. Okay, so for tonight's discussion, right, just now I briefly mentioned key economic data for trading gold is jobs data. So the jobs US employment report came out already, and they exceeded expectations. Non-farm payrolls, they increased 379K. They estimated 200K only. So it's quite a significant jump. And of course, unemployment rate also improved slightly, 6.2%, it estimated 6.3. Okay, previous also 6.3. So which means that it is actually good news when the economy of US is looking good. It will of course pressure gold. All right, so people will unwind their gold holdings because they will tend to take the money to either buy the bonds or of course buy stocks. Okay, now stronger expectation for full recovery as the rapid pace of vaccination and the progress for stimulus front will continue to put pressure on gold. So, and another piece of research you have to add to your fundamental analysis is to take note of central banks meeting. Now, because we are trading gold, right, which is essentially valued in USD, we need to know what the chairman of Federal Reserve, Jerome Powell, is currently discussing. And what is his outlook for the months ahead to find hints of whether he will inject money into the economy or cut rates. So far, he has been saying no cutting of rates. Okay, so that's we can put that aside now. And also another thing that you need to pay attention is other central banks meeting. We are talking about the ECB, the European Central Bank meeting, Bank of England and Bank of Japan. Why? Is because they are major alliance with US, they are major trade alliance with US. So if any of these alliance, they propose to inject money into the economy, we will definitely start to see other central bankers start to consider to do the same. Okay. Right. So far, any questions? You just continue to type them into the chat box and I will answer them. Let me see. Okay, thank you for all your questions. Just give me a second to just look at that. Okay, from Leong Kit, right? Okay, what percentage of a portfolio should one hold of gold in a market like this? It really depends because firstly, I need to look at your whole portfolio, your investment portfolio. We are not only just talking about your stocks holding, we are talking about your investable assets. Meaning, are you also having properties that you are currently servicing and things like that? So we need to look at the whole portfolio, and then we are able to recommend that, okay, probably a certain percentage will go to maybe hold some stocks, blue chip stocks, and then a certain percentage you can keep it for liquidable type of trade investments such as gold or currency futures, forex, or CFDs. So it's a question that I really cannot answer unless you are able to show me some degree of your portfolio holdings. Okay. What else? What else do I have? Okay, Mr. Low, David Low, you asked if gold price is 1700, 1 point rise means price has gone up to 1701. Is my understanding correct? Yes, it's correct. Meaning 1701 means it's $1. So $1 for 1 ounce contract, it's USD $1 profit or loss. So if you buy at 1700 and the price went up to 1701, you earn $1 from 1 ounce of gold contract that you buy. Okay, of course, the same thing if you sell at 1700 and the price went up to 1701, you are at a loss of USD $1. Yeah, okay. And what else do I have? Just continue to type in your questions and just give me a second to take a look. Okay, Miss Lily Low, you asked what's the duration of the current correction? For me, I will firmly believe that because now the timeline is Senate have just approved the 1.9 trillion, and of course we know that projected for the next 6 months, the second half of 2021, gold will start to pick up a little bit. So we will see gold will continue to dip. Probably the next 2 months or so. So this is the short-term view that we are looking at. So if you are intraday trader, I will still encourage you to stay on the sell side and just keep selling at every rally. Okay, but if let's say probably when it starts to kick in, when gold starts to appreciate after the correction is probably because we are quite close to the bottom, but still not there yet. So I would say that probably another 2 more months, then you will start to see if the price is very close to say 1500 or 1550, then maybe you can start to be more aware and start to look at the fundamentals and look at the current situation and how are the current news affecting the gold movement. Because I cannot give you a definite answer when it will stop, and I cannot give you a definite price when it will start to pick up, because most of the time such movement, it has got to do with the current market conditions also. So who knows, maybe 2 months down the road, President Biden want to do something else again, and then of course it will definitely move the market again, and then we have to re-look at it again. So it's quite dangerous to just take our word for it right now. So you need to really monitor. But I can give you the benchmark is about 1500, 1550 price. So when you reach around there, that level, you can start to see what are the news impacting gold movement. Okay, from Jojo, we see that will bond yield continue to rise and cause gold to drop further? If you are asking for the near term, I will say that yes, bond yield will continue to rise. And not only just bond yields, we are looking at especially the appreciating dollar index is also on the rise. So definitely the gold will continue to drop further. But as I mentioned earlier, that if you look at the 2-year movement, the correction is quite done, but not yet. So we are very close to the bottom already. Okay. So not only just the bond yields, but also dollar index. So take note about dollar index also. Okay. All right. So I'll just continue. If you have any more questions, just continue to just flow them in. So of course tonight, all these charts, I took them from MT5. So essentially the forefront of Phillip Futures platform is MT5. This is a multi-asset class platform, meaning that it has Forex, CFD, and Bullion, such as your gold and silver trading. Okay, and why the beauty of this platform is that it's very easy to use and is also available on mobile phone trading. But why is it so popular? Is of course the ability to initiate 2 open positions without knocking off each other. All right. So for example, you can initiate a buy and a sell on gold. Now, traders, they use this function to hedge their positions, okay, and also to represent correctly their trading views, meaning to say you don't just outright at one side only. Now, say for example, just take a look at this chart, right? I have a long-term view. So I will buy gold and I hold. But I notice that the price are coming off in short term, right? So I also want to take advantage of that opportunity. So what I do is that I'll initiate a sell gold position and to take profits short term. All right, so you see that I have a buy and a sell position there. So when I want to close off any of the position, I just have to choose which order that I initiated and I just close it off. All right. So another attractive feature about this MT5 is zero commission. You don't pay any commission for the trades you do on MT5. Okay, so while MT5 is really a powerful tool for trading, a lot of people, they don't know how to use it. There's a lot of functions available, but they are still relying on their own way of analyzing the markets, which is usually subjected to their own biasness or experience. So what we did is that we have invested in this additional feature called Auto Chartist. Essentially, it's a plugin where once you add it into your MT5 program, it will auto chart out all the patterns and calculate your risk. And I think this is something that a lot of my investors, they are liking it, this feature, is because part of my Zoom meetings with them, my class-based discussion with them, I will also ask them to memorize all the common chart patterns. So with this function, they kind of like don't have to memorize all these chart patterns. So for example, in this slide, okay, I added auto chartist into the Go charts, and it plots out two patterns, a descending triangle and a support in 1 hour time frame. All right. So it's very, very fast, good for you to use. Okay, and also, of course, this system is flexible, so you can customize what type of patterns and in which stage of formation you want to see. Okay, so say for example, you want it to form properly a descending triangle, then you can just tick the relevant boxes and then just let it run. All right, so coming to the last leg of this session tonight, I will just brief you through what are the current promotion Phillip Futures is running and the process of getting your trading account set up. Now, the current promotion right now is refer a friend program. So introduce your friend or your loved ones, and after they do one trade within the first month of account opening, you will be entitled to USD 104, because if you have a MT5 account, everything is all calculated in USD. All right. Okay, so there's no limit to how many people you refer. I think just now I saw one question asked. So you can just refer as many people as possible. So for more information, you just please feel free to contact me. Okay, so how to register your account? All right, you just have to scan the QR code on the right side of the screen. All right, it will bring you to my info. Okay, and you just use my info to fill up your application. Now, of course, once your trading account is ready, you can then proceed to start trading. But however, because you have not funded in the account, right? So you just have to fund in whatever amount that you need to trade 1 ounce of gold. Okay. So I'll just pause here to just look at some of the questions flowing in, and as well as give you some time to register your account here. Mr. Lee, okay, you're asking how much do I need to set aside to start trading gold, for example. Now, like I mentioned to you earlier, 1 ounce of gold is the margin required is only 20%, which is about USD $340. So I think minimum you should have around that amount, but that's only just 1 ounce. So it really depends on also your risk and reward. Because say for example, if your risk appetite is you're looking at making USD $200 per week, right? So 1 ounce of gold is definitely not enough. You probably need to have probably about 20 ounce or 30 ounce of gold. So you just have to multiply the 340 USD times 20 ounce of gold, and that will be the amount you need to set aside, the bare minimum, all right, to trade gold. And I'm talking about intraday type of trading, which means that you close your position at the end of the day. Of course, if you're looking at long term, say 6 months down the road, then definitely you need to have a bigger buffer for the short-term downside. Okay, but I would say modestly, if you're looking at long term, say the next 6 months, probably USD 20,000, just set aside that. All right. Okay. What is the charge for you to manage? I'm not sure if I understand this question, Elson. So probably you can elaborate with your question. Okay. All right. Okay, let me just look through your questions. All right. So while you scan and registering your account, I just like to just emphasize again whether if you are deciding whether to open an account with us, I will really recommend that you will benefit when you trade with Phillip Futures, because you know, knowing the direction of the market and attending market outlooks like that only give you 50% of chance of success. Seriously, you need to structure your trading portfolio in terms of the size and your quantity of your gold investment to fit your profile. All right, so you need to engage a personal broker to be able to look at your current portfolio and then advise how much the size of gold investment you can take on. So at Phillip Futures, right, we have brokers, and personally I train some of our brokers, so I know where is the standard of market knowledge and the ability that we have. So I believe that we can really assist you in your trading journey far better than any other brokers right now in the market. All right. Okay, another one is, do you provide trade alert or from Mr. Henry, or can follow your trade? Okay, as much as I like that, but however, our system is not like the US Robinhood system. So I will, the best that I can offer is the bi-weekly Zoom meetings where all my investors, we will come together and then we will just trash it out, talk it up about the market, about what's moving and what are they stuck in, and which one they should cut loss, and what is the opportunity to which market to get in. So then, you know, you how to say, when we discuss like that, it's so much better because you learn rather than we tell you a trading view and you just follow blindly. And I think recently there's a case where a brokering house, they release a trading view, and all the traders, they just follow, right? All the investors, they just follow, and then the whole stock value just crash. So like I said, the thing is that's not very feasible at all, because essentially I always think that trading is a skill that you need to learn, especially if you're looking at long-term, your retirement activity. You should actually learn the fundamentals, the basics, and how traders like us, we look at the market and what forms our analysis. So for Mr. Henry, I will believe that this way is the best way rather than following my trading view. Okay, if you're asking about if there's any additional cost for me to manage the account, no, there's no additional cost at all. All right. Okay, so I'll just take last few questions. Okay. Okay, so Another one is, do we have to pay for the bi-weekly Zoom meeting? No, don't have to. It's actually my service for my investors, because being in this industry for so long, right? I realized that a lot of my investors, they, as much as I teach constantly and all that, I just realized that they need refresher. So with this type of bi-weekly Zoom meeting, a lot of my investors, they came back and they told me that they really see like really good results in their trading. And it's not that they do not know certain things that I've mentioned before, it's just that they need reminders. So a lot of things that I covered on the, say, your trading strategy, on and how to read the chart, because essentially trading is all about reading charts, how to use MACD, what is RSI, when can you use RSI, when do you use stochastic, or when do you remove all these things and just focus on drawing your trend lines or support and resistance. So these are things that Zoom meetings I will cover, and I think it's much more beneficial this way, where every 2 weeks I will gather everything, all the major thing, especially markets that are really moving. So sometimes I see when the market is moving and there's a lot of opportunities coming up, right? Then I'll probably blast out maybe a urgent Zoom meeting, and which I did like last year, and then wow, so quite a lot of my investors just came together and just hear what I have to say, and then they are successfully able to went on to the market to grab hold of the opportunity. So I think this kind of the meetings, right, has been very successful. So I've been continuing it every bi-weekly. So this is something that is free, but it's only offered to my customers. So which means that when you scan this QR code, essentially your account will be parked under my care. So that's when you will also receive notification to join the bi-weekly Zoom meeting. Okay, all right. So you just scan the QR code, all right, and it's already 8:03, so I just have to wrap it up. All right, so I've come to the end of my trading session. So I trust that it has been fruitful, and I hope that I've gotten you to think seriously about learning how to trade on your own and make home trading your lifestyle. Now, the link to this recording of the webinar will be made available in our follow-up email tomorrow. So if you still have any more questions on the webinar, or would like to get started, you just reply to our email and we will get in touch with you. Okay, so this is Shermaine, your trainer for tonight, signing off. Okay, have a good evening ahead.